Okay, so thank you so much, everyone, for joining on to our session. Again, my name is Brittany McDonald. I am the founder of the EcoShore Sustainable Futures Network. It's great to be connected with you all this afternoon. You've taken time out of your very busy Saturday to be with us, and so we're very thankful for that. So I will continue on into the session. We have a very packed afternoon for you today. We have sent out the agenda via email. Feel free to let us know if you would like a copy of it again. But the agenda starts with us going over the reason why we're having this session today. We will be discussing budgeting, saving, investing, learning about loans, and also the practical strategies. If you were in attendance to our virtual workshop, you would have noted our in person workshop at the Villa Community Center. You would have noted that we discussed some practical strategies, and we're going to expand on that today. So it's not completely a repeat, it's more so us diving in even deeper. And yes, before you ask, we will be sharing the presentation and also some workbooks for you to use and access to our financial literacy library. So all of that will be sent out so that you would have that. Also have a wrap up session because we want to be able to get feedback from you and what you would like as we build this financial literacy community. It's something that we have been advocating for regionally to be incorporated into the school systems as well as into the curriculum locally here in Antigua and Barbuda. And so we want your feedback as well because we want that empowerment for generations to come. So we have some QR codes on the screen. So please take a moment to connect with us. We have our link tree that has various activities, our Endeavor publication, which we'll go back into, and we'll share this information for the session feedback as well. But feel free to take a moment to scan with your mobile device. Okay, and just as a note for this session, please communicate with us in the chat. We will be able to unmute during the conversation and when we have question and answer. But for now, we won't have the session give access to unmuting because we want to ensure that it's a calm environment. We know that sometimes when persons are joining on, they may be in a noisy application or environment. And so we want to make sure that we have quiet as we'll be discussing items that will get your mind going. And we want to hear back from you in the chat as well. All right. So without further ado, about EcoShore Sustainable Futures Network. So we are a regional NGO that's based in Antigua and Barbuda, but we operate in other Caribbean countries. We focus on innovation and sustainability. And you might be wondering, why is an organization that's focused on sustainability, climate change, the environment, looking to help with financial literacy? And the easy answer to that is we want to ensure that when tools are available, they're accessible by our communities. We want to make sure when opportunities are available to grow your business, to become an entrepreneur, to access financial instruments, that you have the tools and the understanding of what you're diving into, right? And so we've seen where because our community members, individuals, businesses do not have these financial tools, the knowledge, they're either not applying for opportunities or When they do apply, they do not qualify for these activities, for these grants that are accessible to them, that are made for them. And we particularly see that within the blue economy right now, specifically with the fisher folk. There are lots of opportunities including for Antigua and Barbuda, and persons are not tapping into it. So we want to make sure that we're building resilience, but that also stems from starting with a solid foundation. We also have our expeditions branch. This is our regenerative tourism area that focuses on eco-tours and education, and we do a lot with the schools and also adults who are in tourism so that we learn about our environment, the importance, and how we are contributing to it and making sure that we are excellent stewards. So you can volunteer with the Eco Shore Sustainable Futures Network and connect with us. We will be introducing you to some team members, but wanting to share our amazing team that has done wonderful work in preparing this presentation, but also the amazing work we've done since we've begun in 2023 and being formally registered in 2024. And so these are amazing, bright young minds based in Antigua and also in other Caribbean countries. We're guided by 8 pillars, and these pillars focus on education, experience, environment, equity, engagement, empowerment, economy, and expression. We're very big on creatives and ensuring that they also have the financial tools and understanding of systems related to royalties, licensing, and intellectual property, and also ensuring that we're creating experiences that encourage education and empowerment of individuals and community. So, again, encouraging you to connect with us, and we will be sharing some links in the chat for you to browse our Endeavor publications where we discuss and showcase in a multimedia fashion our engagement with communities locally and abroad, as well as how we represent you and your feedback that you do within the survey. So here's some pictures of us connecting within the environment in the Fitch's Creek Bay, Spencer's Bay, Dickinson Bay, and also with various primary and secondary schools with our eco tours. So whenever you see we have our UN days, we encourage you to participate with that. We've also begun our education activities where we've done ecotourism short courses, providing materials to other civil society organizations along green procurement, waste management, and also looking at how those two intersect with tourism and our local culture, because our culture, how we view things, how we perceive it, is equally important. All right, so I mentioned our library. So we do have a sustainable tourism library and a financial literacy digital library that we will give you access to over the course of the next year. So we're not going to stop after this virtual session. We will have another in-person engagement in December when we're doing our annual reporting, and we'll have a vision party, so to speak, so that we can really plan and set these goals for our financial future. It would be remiss if we do not share our remarks regarding the support from the University of the West Indies Five Island campus. They jumped right on to support the work that we're doing in financial literacy, connecting with community. And so we really appreciate their support and commitment to ongoing education. Our expeditioners also are from the University of the West Indies. And so we're really excited that we're having bright young minds support the work that we're doing as a nonprofit in Antigua and Barbuda and regional. So feel free, of course, to use the chat if you have any questions or any topics that you would like me to expand upon further. You can do so in the chat, and we're going to dive right in to financial literacy components. So, in this workshop, we will be going over how to improve your access to financial resources that are available locally, regionally, internationally, and also guidance for personal finance. So we do have business finance that will be coming up in November and December, where we'll speak about small businesses, but this is really focused on you. So I need you to start getting into that mindset of I'm an individual, I'm in my own path, and how am I going to make it successfully to the finish line? So you may be looking at the chat and seeing what other people are interested in or what their goals are, but you have to be self focused, self interested in this workshop. We're also very interested in assisting you with creating personal emergency funds. As we see the impacts of climate change, as we understand that there are vulnerable communities, we want to ensure that you have the tips, the tools you need to move forward by budgeting, saving, investing, and avoiding those common pitfalls, and both looking at short and long term investment. So, my name again is Brittany McDonald. I know that we had some people join on. So, just a bit of my background. So, I am a project management professional. Right now, I'm working across multiple portfolios as a manager, and I focus on resilience building, infrastructure, and also the empowerment of our vulnerable communities, including youth, women and girls, boys and men, as well as persons with disabilities. And I've specifically worked financially within the realm of grant making. And so this is where these organizations provide funding to individuals, to organizations, and also on the entrepreneur side of business finance, startups, and encouraging persons to enter into those fields for financial freedom. Going to hand over to my team to introduce themselves as well because you'll be hearing from them while we connect.
Good evening, everyone. I'm sure you might recognize the name because I've been the one sending out all those wonderful emails. But my name is Aditi Benta. I am the admin assistant at the Official Sustainable Futures Network in Antigua and Barbuda and other areas in the Caribbean, where I support outreach, events, and educational content that connects people to nature and science. I have a passion and I love helping people discover the power of sustainability through education. And it's a pleasure being with you all here today.
Good afternoon, everyone. My name is Shamaya Ambrose, and I am an intern here at the EcoShore Sustainable Futures Network. I assist with activities and initiatives of the organization. I'm also a student at the University of the West Indies, Five Islands campus. I'm studying banking and finance, and I'm in my final year. So I hope we can have a productive presentation today.
Good afternoon, everyone. My name is Dorcelia Joseph, and I'm an intern at the EcoShore Sustainable Futures Network. I hold an associate degree in accounting and is currently pursuing a bachelor's degree in accounting and finance at UWI. And outside of my academic life, I enjoy everything nature and very adventurous, hence my initial interest in EcoShores. I hope you all have a wonderful meeting today and we have fun and we learn.
Wonderful. Thank you so much, everyone. So, again, these are team members who will be speaking today. I wanted to make sure that they receive that encouragement to practice their public speaking skills and also being connected with their community and persons who are interested in financial literacy. They will also be connecting and engaging in our WhatsApp group. So some of you have already joined that group, and welcome. And if you feel like you want to also be a part, feel free to do so as well. It's going to be a very encouraging community, where we'll be able to tap into the resources together and share instances, ask questions, and receive that sort of mentorship. So within the registration process, we got some questions and they went a little something like this. So, what are ways that I can invest in the Caribbean? How do I invest with a little money? What are the risks and rewards? And so, investing is one of the main reasons why a lot of you joined on. But we have to also be responsible when conducting a financial literacy workshop and share with you that yes, there are tools accessible to you, but you have to have that solid foundation. Now, we had our in person session, and about 2 to 3 people said that they have a budget and they stick to it. So, our first question is, how many of you have a budget? So, that's one. And do you stick to it? So, let us know in the chat. Okay, so not seeing comments come through, so I'm wondering if we have a budget. Let me know. Okay, so I see that we have a budget, and do you stick with it, or sometimes you waver? Okay, sometimes you go overboard, and that happens. One, we're going to talk about inflation, but I'm just going to say it now. The prices of everything are through the roof. I think we can all agree on that, right? And so, compared to a year ago, 5 years ago, we have had to adjust. So, even if you had a budget, don't feel bad because you've had to make so many decisions navigating maybe job loss, income loss of sorts. And so, managing your finances has been a challenge, and we have to accept that as well. We've also discussed insurance. So there were persons who stated that they paid the wrong insurance policy. It wasn't in alignment with what they needed. Here, it's not about going back in time and getting the right policy. Yes, there's money lost, but what needed to happen in this situation is being able to advocate for yourself financially. In this digital world, we can research, but in person, we still have to be able to go to the bank, go to the insurance company, speak to our financial advisor or the person that's recommended to us at the financial institution and ask them for all the details, the fine print, the nitty gritty. And so this is something that we want to discuss here today as well. Right, seeing more comments that you have a budgetish. I like that. We might use that. I love that. Budgetish, and you tend to waver. So, yes, understandable, especially if you are in a different phase of life from others around you. So, some persons in this group might have children, some might not. Some may have a home, some might not. Some may live with family, some may not. So, it's okay to put things in the chat. No one is going to have the same situation. All right, another question that we had, and so this is what we'll dive into as well, is how to break away from family. And I'd say this in general, to be independent. In this case, it was a family business, and to start investing on your own. And there's so many reasons. Someone might say, "Oh, this looks good. You have a family, like that's a sweet deal. Why give it up?" But financial freedom is also connected to our emotional freedom and making sure that we have stress relief, right? And so you don't want to be in a situation, and this is me making an assumption because this is anonymous here, but you don't want to be in a situation where somebody's holding money and trying to control you. And another area that I work in is ensuring that in relations, that persons who want to leave negative situations can. And so this is another tool where we have financial freedom as a main premise. We call it vex money, right? So that's how we would colloquialize it. All right, so we're gonna have our first icebreaker, money moves for the young people. We can say Cardi inspired this one. Share one financial goal that you have. It could be saving for travel, it could be investing, it could be paying off debt. Let us know. What are some of the financial goals that you have? What would you like to achieve either at the end of this year or within 2026? Gonna give us a little timer here. So you have a minute to think about it. Give everyone some time. Okay, so I'm seeing some come in. So we want to pay off debts, more savings, investing, learning to invest and grow wealth, buying a home, investing. All right, wonderful. Okay, so we're gonna dive in to the first session. We're gonna be discussing budgeting, saving, and investing. And while you can take time to make notes, again, we're sharing the presentation. I want you to more so focus on thinking and processing this so that if you have questions, you can place this in the chat. I'm already seeing some questions roll in, and so we're just going to make a note of that as well. And at the appropriate sections, we'll dive into some questions. Okay, so our topics are going to be around tracking income, expenses, how we're going to create a realistic budget, and that emergency funds and short term savings. So we're picking up the tools in this session to go over those items. Right, so what is financial literacy? These are the concepts related to how we can become independent, how we can make sure that no one's pulling the wool over your eyes. It encompasses the tools, practices, and building a positive relationship with our money. We're going to go into emotions and how that plays a part in how we continue to access a positive relationship with money, but it helps us to spend wisely and to save time effectively with our money, laying this groundwork for achieving both immediate and long term financial goals like buying a house, assisting our children with student expenses. So, in this next section, we're going to explore how we can gain the skills in money management and setting these financial goals. So, as outcomes, we're going to be going over financial literacy, ability to set goals, money management skills, and applying our knowledge to our finances. So, in order to do that, we have our main five. We do have a six, but a main five is budgeting, because without knowing where your money is going, you won't be able to achieve some of these goals that you've mentioned. And with investing, I say this a lot, investing is money that you are willing to lose completely. So if you are not prepared to lose that dollar, that $1,000, investing is not the stage for you. It's saving, right? But the first step is budgeting. Then, once we know where all of the money is going or how we allocated it, we can then save. Now, the reason why we have the Build Your Future workshop is because you're saving for your future self. The decisions you make today, as small as they may be, lead to a positive outcome in the future and impact your future. Then we have investing, as I mentioned, solid foundation, and it's built upon budgeting and saving. Investing again is money that you can afford to lose because it's a risk game. And so sometimes persons go into it thinking that, oh, I have this sure bet. And we're going to go over some of the biases as well. But then they lose their investment, and because that was their sole dependency in terms of income, they've reached the bottom again. And so we want to avoid that happening. We have to be responsible with our finances. Then borrowing. So this is where you're using someone else's money to be able to access the goals that you have. So, whether buying a home, that's called a mortgage. If you want to get student loans, that's investing in your education, but you have to pay it back, right? And there's also collateral and things involved in that, and co signing, which we'll get into, and planning for your future. So, diving into this area of budgeting, we have our income. That's the money that you're making. And there are various ways to make money. Sometimes you have time, sometimes it's royalties. And I have to put a plug here because we often think that the creative arts aren't important, but writing a book can lead to financial freedom, filming a movie, being an actor, actress can lead to financial freedom. Being a musician, because of royalties, can also lead to financial freedom. But in our Caribbean culture, we don't emphasize these areas, especially because we don't understand and talk about the pathways to these points. There's also passive income like rentals. So a lot of persons would have used the like Cricket World Cup to create Airbnbs and have rentals for the AUA students. There's rentals that persons would provide. So these are other forms of income. We have fixed expenses. This is where you have the same cost every month. A great tip that I like with this one is if you can multiply it by 12 and it remains consistent, then that is a fixed expense. So typically your rent, mortgage, your phone bill, these are things that you'll be able to have as fixed expenses. And can anyone share why a fixed expense would be the best type of expense to have? Let me see who's thinking about their fixed expenses and why it's good. Why are fixed expenses good? Okay, it's stable. That's right. No surprises. I know what to expect. Exactly. You know what to expect. Nobody is coming to say, oh, you owe an extra $200 on your rent. No, 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 no. You either sign the lease. You know exactly where it's coming from. You know if there are any additional expenses that they're already in writing. And yes, I love that. It's better for your budget because you can plan when things are in a pattern, it's systematic. You can plan, you can organize yourself. But that is not how life goes. There's not only fixed expenses, we have discretionary expenses, miscellaneous expenses, the curveballs that life throws our way. Now, most persons on the call today would be from Antigua and Barbuda. And what happened recently that took us all for surprise? What nearly washed us away? All of that rain, right? We had all of that torrential rain, the flooding. Yes, the sudden rain, exactly. Tropical Storm Jerry. All of these, and not just Jerry. All of this rain that was unpredicted, and no one told us, right? And so we have to expect the unexpected in life, and that's where the risk management comes in. Expecting the unexpected, and so with our discretionary spending, these are sometimes the non essentials that we have. So maybe the extra ice cream, or if we make a makeup purchase, or if we buy um, an extra tool for our car. These are the discretionary expenses, but there's also the emergency expenses that we have. And so we put this in our savings category. And so with that, we want to develop this emergency fund because things happen. Life happens. No one told us about COVID a year in advance so that we can plan. But these are the things that we know it's inevitable that something is going to come out of left field and surprise us. But if we have our savings, if we put even a little away, it will turn into a lot to help us. And we see another comment. It helps your money to grow over time, especially for your long term goals. Exactly. When you're saving, when you're budgeting, you see where everything is going. Now, I'm going to share the 50, should be the 50-30-20 rule there, but I'm going to share this with you. Now, there are many ways to budget, but this is one. It doesn't mean that it's directly the one for you, and we'll go over some of the others. But a, the budgeting formula, and this is usually what financial institutions look at to see if you're a good candidate, is do you use 50% of your income on the needs? Your main expenses, your are you able to cover your home, your rent, all of that? No. In our examples, we're using $3,000 as a base, and easily you can see that $1,500 is what people are charging for the rent alone, right? So all the other expenses, if you have to pay any utilities, buy groceries, sometimes this is not 100% practical based on our current economic standpoint. And we have to appreciate that. So sometimes you're going to be in a season of life where you're not able to save fully. Okay, and we'll dive into that more later. But I want us to go over this exercise. So tell me as I go through which one is a fixed or a variable expense. We're testing our knowledge here. So for streaming services, Is that a fixed or variable expense? Hmm. Okay, someone's saying fixed. Is that correct? Do we have anyone else that seconds that motion? Okay, we have fixed. All right, that is correct. Streaming services is a fixed expense because it's the same amount monthly. It generally wouldn't change to become variable unless you are doing something to that streaming service. So maybe you're buying an extra like pay-per-view movie or something like that. But generally, for example, Netflix would say if you have one screen, 3 users, I charge you $21.99, for example. And so that's a fixed expense. You know what they're going to charge you based on what you signed up for. And there may be variable parts, but generally you could multiply that by 12 and know how much. Or they might charge you an annual fee. Okay, what about groceries? Is that a fixed or a variable expense? Okay, variable, yes, because you may go to the supermarket and you may need $100 worth of groceries or $500 worth of groceries. Every time you go to the supermarket, it might be a different amount. But not only that, the prices may change as well. And that's in relation to the service provider. So let's say one of our local supermarkets, they may increase their operating costs. And so they turn that over to us as the consumers. Or the price of the item might have increased, even though there's no product increase. So that's related to inflation. All right, what about gym membership? If you go to Extreme or if you go to Athletic Club or Barrows, do they change your gym membership every month or is it constant? Okay, it's fixed. So you pay the 150 and they can't tell you it's 200 unless they make an announcement to everybody else that it's 200 and then it becomes fixed at that rate again. Excellent. Okay, what about car repairs? We have tons of potholes sometimes, so I know we're feeling this one. What about your tire? Okay, yes, all right. Variable, exactly, because if it's your tire that gets a nail, it's one price. And if it's your alternator that needs repair, or if you need to replace it, a starter, all right, your belt goes out. It could be a multitude of things. So the car repair is variable. So it looks like we're good on this item. Very nice. Okay, final one. Medical expenses. Is this set? Do we know what our medical expenses will be? Variable, exactly. So I want us to think about anything that's variable is also related to life happening to us. So we don't expect to be sick, right? We don't expect to need to go to the doctor and then they say that we need a prescription for this and a vitamin for that. So these are our variable expenses, and they're surrounded by life happening to us. All right, very good, very good. Feel free if you have oops, any questions in the chat. All right, and we're gonna go over our recap a little later. Apologies for that. How did I? Okay. All right. So here we are. So saving now. When we're talking about saving, I can't emphasize, it sounds so cliche, but a little goes a lot, right? It goes a long way because when you're saving, you are saving again for your future self. You're saving for, I'll use me. So, Brittany, I'm saving for future Brittany. So, we do this for maybe when we're planning our vacation, or if we want to go to an event and we want a special outfit, or we want a special phone. These are things that we would be planning towards, but we have to think long term, especially because we have to think about our retirement. I don't know about anybody else on the call, but I don't want to work for all the days of my life. I want to be able to retire. I want to be able to sit down and relax at some point and not have to clock in and clock out to a job or even for a business to operate without me, right? So your savings is really about creating that flexibility and also the opportunity to explore options and reach our goals. So you have goals about homes, maybe your goal is to travel. Maybe your goal is to have a luxury brand purse or perfume, whatever life provides, you want to be able to afford that. So you need to be able to automate your savings. And this doesn't mean to have a set and forget it with, let's say the bank automatically takes out $20 out of your account. It's more so creating discipline where you decide I'm saving $150 every month. That is my future self when I'm old and gray, when I'm maybe 60, 70, I have that to use for the future. So it's about setting that mindset in your mind that when my budget reaches that extra 150, I'm taking it out. That's for myself and I'm using it for future expenses. Then we have investing. So there are various ways to discuss investing, and you have access to some tools regionally. We will be sharing those out where you can enter into the stock market. We'll mostly discuss the Sagicor options because they have a new platform that's accessible for us um, in Antigua and Barbuda in the Caribbean, but there are some thresholds. So when you're investing, because you're investing money that you can afford to lose, it has a minimum threshold to enter into that system. So there's a variety of tools, but investing requires the solid foundation that we've been discussing, and it involves a high amount of risk. I'm not going to sugarcoat it. I'm not going to tell you that, oh, yes, you put in $1,000 and you're going to become a millionaire. There's no who wants to be a millionaire in this case. It's about making sure that you're able to make these solid financial decisions. Technology has really helped because to enter into investing, you tended to need the one on one sit down meeting with the financial advisor. They would write on a paper, they would then have to send it off. And so it's become much more simplified over the course of the last few decades. And it's also something that's more accessible. Again, once you meet those thresholds and you believe that you have those skills related to that emotional maturity with money. Now, when it comes to borrowing and credit, there are two important aspects of money management that we should discuss. So sometimes life's opportunities like preparing for higher education, these might require more funds. And so you're you're going to have to ensure that you have these funds in a lump sum to be able to pay it off. So even with our term with student tuition in our primary schools or secondary schools, if they're private, you do have to pay the term price in full or by a certain date. So it's the same with student loans, for example. And so this is why it's important to plan and think ahead and to understand these types of loans that are available and any repayment plans. This is typically what gets people as well. Even if you qualify for the loan, it's the repayment process. So as we continue within our community, we're going to discuss different methods for repayment, like the snowball method and paying down over time, paying on the smallest interest first, that sort of thing, um, and understanding interest rates more and what makes them fluctuate as well. And this makes it so that you're prepared and empowered to make more informed decisions. Now, I do want to touch on credit cards, and this is maybe unpopular, um, but with credit cards, this is you still borrowing money. Now, as someone who's involved in technology, and I'm a huge technology advocate, one of the strategies that is so impactful is being able to pay with cash. Because when you remove that relationship with the physical money and it becomes this plastic card, and now, for example, in the States and in the Europe, you have you're just paying with your phone. That even further dissociates you. It separates you, detaches you from that emotion with the physical cash. And so we still have to find ways where we're building that relationship and setting that discipline for us as we advance in technology. Because having the credit card was the first step to this detachment. And it wasn't something that was necessarily intentionally prepared for, but research has shown that you have a different appreciation for when you're paying for something with the physical cash. It also takes more time because persons have to count out the money, you have to count the money, you have to check that the change is correct. Here, even within a digital framework, the speed decreases that level of emotional connection. And feel free, let me know. Have you experienced that? Like you feel a bit different when you're paying for something with cash than when you're paying with a card? This was one of the research studies that was done. And so it became one of the strategies to improve financial planning by saying that you would pay for things in cash rather than paying with your card. Now, we want convenience, right? So it's not say that if a vendor only accepts card that you're not going to buy the item that you need or you're going to inconvenience yourself, but it's just recognizing that would I give this amount of money if I had the physical cash with me? It's also seeing the numbers on the bills. It's much different than interacting with the number on a phone or not being able to see the number via the card. Now, more so on the end of using money that you will have to pay back. Credit cards have interest rates. They're typically within the 24.9%, and they can be fixed or variable. So you do have to find out from the card provider, which can be your bank, um, what their rate is and understand that if you do not pay it back at the end of the month, or even sometimes if you pay it back, they may have a fee. They may have an annual card fee, or they may have a fee related to you having the card monthly and not paying it off at that interest rate. And so this compounds over time and makes it difficult to pay it off. So a purchase that you may have spent $20 on, at the end of it becomes $50. And so this is where we call it like vampire spending, because you're spending money without actually benefiting from the use of the money or your time. The credit card is still good in the case of emergencies, unexpected purchases, but it's really important to not use it for miscellaneous expenses that do not improve your life over time. Okay. Again, feel free to post any questions in the chat as well. We will review and visit those areas. Okay, so I can't talk about borrowing without co-signing. So how many of you have had someone borrow money from you? Let me know in the chat. Have you ever had someone borrow money from you? Okay, that's the first step. Yes, no. How easy was it to get that money back from them after they borrowed it? No one's had anyone borrow money from them. Family, friend. Okay, yes, and it was hard. Exactly. So when we go into when we go into that section in more details, you're still waiting to get it back, right? There was a headache. Exactly. So we have to realize that finance is at a table, and there's always going to be someone investing and someone borrowing, someone who is gaining, someone who is not necessarily losing, but being able to take advantage of the system and benefiting from it. Now, when we're talking about loans, if you're receiving it from a credit union or a bank, they are giving to you. They are, in essence, investing in you and they are trying to get their money back. So, co signing was the bank's way of saying, hey, you don't qualify on your own. You maybe don't make enough money. You maybe have had a poor credit history. I'm going to give you the opportunity to find somebody who is willing to pay this back for you in the event that you can't pay it back. Because I don't really trust you as much based on how you stock up financially to me. Because I still need to invest. I still have money that I want to put in and I want to be able to get money back through the interest rate. We don't think about that. The interest rate is what the bank is getting paid and has to then pay its shareholders back. Okay, so find someone, family, your friends, and some of you on the call may have done this before, but you may not have termed it as co signing. You may have considered it helping your family member out. And if they don't make that payment, right, then you are on the hook. I know I have very nice words here, but I'm gonna talk how we would. You're on the hook. They're going to call you, they're gonna find you, and if you put up your house or if you put up your car or any land that you put up, then that land is in jeopardy and would go to the financial institution if you don't start making the payment. So this is not a bad thing. It is a tool and it's how it is used. I would never recommend getting into a co-signing situation with someone that you do not trust, that you someone you don't have access to in terms of they're either in a physical space or if they're in another country that you have access to go to that country with them. And typically you may not be able to sign off on a loan unless you're both able to be physically there. But um, in most cases, I know that we have international activity. So just making that premise, if you know that you can't go to Europe and you're signing on a loan in Europe, there's a problem there because you won't be able to access and seek any kind of legal remedy. So that's really important. And it's equally important to not let anyone guilt trip you into co signing for them. Now, that said, the other side is if you are the one seeking to get a home, a loan of any sort, and you ask someone to be a co signer, you understand the gravity of the situation and that they're doing this because they want to see you become successful and have that forward thinking of planning for your future as well. So we want to be respectful of anyone who is willing to co sign for us and demonstrate that they're interested in our mutual success. And so when we also think about planning for the future, we think about retirement. And so we brought this up earlier. But here we have to think about our future selves. I don't know, and I will not come here to tell you, yes, I know what the next 40 years is going to hold. Do this, do that, and you're set for life. Anyone giving you that kind of sweet, good advice, they're not serious. And they're not interested in your development or growth because every day is unexpected and we don't know what the future holds, but we can plan and we can prepare. One of the tools that I would recommend you reviewing and researching to see if it's right for you is seeing if you can access a life insurance policy with a cash value. During COVID, a lot of persons would have used the cash value that they accumulated in their insurance policy, not only to pay for their policy, but also to withdraw it to pay for other expenses. And so that is a benefit that can be placed on life insurance. So, yes, you're paying for that premium, but you're also able to access it for the future. And then the retirement component. Unfortunately, in the Caribbean, we don't have these safeguards and a lot of government programs that help us with our retirement journey. I'm always willing to be corrected. So feel free if you know of any that we can tap into. But from our research outside of Social Security and receiving any sort of pension plan through government, there aren't any that are mainly accessible for the population. And so we have to think about how we're safeguarding ourselves. So the one thing that we do know is that death is an eventuality. It's an uncomfortable conversation, but it's equally important to have and to discuss with yourself and with your family members because you want to set things up in a way that you are making smart decisions. Okay, now there's an acronym on your screen where we're going to be discussing SMART goals. Now you may have heard of this before, but it's a really powerful tool, powerful acronym, and it stands for specific, measurable, attainable, relevant, and timely. And I'm going to give you some examples. And when we do our breakout session later, you're going to be tasked with creating and setting some SMART goals for your future. And that's what we're going to be using in December when we connect on the 13th. And we're going to be using that for our 2026. So we're planning ahead and we're staying connected with you. And we're going to make sure that we're here to see you through this financial journey. Okay, so specific, deciding what exactly you're trying to achieve. So, one of the things we want for you is to have this personal emergency fund. But your SMART goal might be I want to start having a budget. It may be that you want to save for a vacation. Haven't gone on vacation for a while. or you want to save for your home. This is setting your specific goal that you want to achieve. But it doesn't stop there because you start something and you don't finish. We want to make sure it's measurable. How will you know when the goal is achieved? That it's attainable? Because we want to be realistic. We can't say we want to go and be an astronaut and we don't get our education, we don't know physics, we don't know what stars are in the sky. It has to be realistic. We have to prepare ourselves. So, yes, you came to this workshop and you're listening to us, but you have to do some work too. So, you have to be committed to this goal. Now, relevance. This means that the goal is going to benefit you and you can see it. You have that fever, that fire, that passion towards achieving this goal. And you attending this workshop, you being a part of the community and joining our WhatsApp group says that already that you are ready to set those financial goals. And it's also timely. It's making sure that even if you have a measurement, you know when is your deadline. When am I going to achieve this goal? So I have an example for you. Again, because we're really invested in making sure you have this preparedness for any emergency. So you want to create a disaster preparedness fund and in a year. So I'm going to go through these areas and I'm going to then ask you which part of each area of the acronym is relevant to it. So, disaster preparedness fund with $2,000 value. What part makes it specific? How do you know that that's a specific goal? Let me know in the chat. How do I know that this is a specific goal? Okay, great. So let's see. So because it has a set value and purpose, it names exactly what your plan is, names specifically for the purpose. Exactly. I have assigned my goal with a category. I want something that in the event of a disaster, I am prepared. So for the person who said they want to have a home, you're specifically saying, I want to live in my home that's built by me and you have a particular amount or a particular location. So you could say, I want to have a home in All Saints, or I want to have a home in English Harbor. I want to have a home in New Winthrops. So you're giving yourself that specific goal. So now let's do measurable. I will track my progress weekly so I can stay connected to my progress. What's measurable about it? How do you know that this is a measurable component? Okay, so you can track the savings, how much saved. So, yes, we're tracking, but the part that's measurable is weekly. So that tells me how often. When am I doing my check in? How am I doing my progress? That weekly. So it could say monthly, it could say daily, but you decide when you are keeping track of it and making sure that it's in alignment with what works for you. So weekly may work for somebody, but that might give them anxiety. So you need monthly instead. It might be quarterly, but you decide when you're doing your own self check in. You could also correlate that to when you earn income. So let's say you earn fortnightly, you might do your check in then because you're receiving your income. Okay, attainable. All right, so based on my income and expenditure patterns, I can save 170 comfortably per month. What makes this attainable is a key word. Okay, comfortably. Yes, it's attainable because it is grounded by my circumstances. Now, 170 might be too much for somebody. They may need to save $50 per month starting out, but it's developing the habit and creating it that will make you successful. So I can save the 170 comfortably. It is attainable. It lets me know that this is where I am at. Okay, yes, your income and expenditure is able to tell you, yes, I am able to be comfortable. That is correct. Okay, now relevant. I will have a cushion that I can use to take care of my future self. What makes this relevant? I'll give you a hint in this one. Yes, the future. I'm taking care of my future self. It makes it relevant because I want that cushion and I'm thinking about how my future is going to be impacted by having this goal and meeting it. Now, timely. After 1 year, I will review my status. How was this progress? So this one I'll give to you. So timely, it's after 1 year. So I'm checking my deadline. I'm deciding when I will be finished. So we do go through this in more detail. So we've provided some additional slides for when you review. And this very powerful affirmation because our minds, our minds don't process negative thoughts. It processes it has a positive still. So we have to speak positively to ourselves and tell ourselves that we are good savers, we are good investors. So I am successfully establishing this disaster preparedness fund, or I'm successfully saving towards my first home within a set time frame and ensuring that I'm better prepared for the unexpected or to be able to live freely in an environment where there's quiet and calm if it's your home. So having a positive affirmation helps with achieving the goal, and you are what you believe in your mind. So we have these tools for you. And also, just again, some positive affirmations related to financial literacy and why it's important to be able to benefit from that. So stress reduction and generational wealth as well. All right. So Again, these are five of the principles related to financial literacy, and we go over them in more detail here. Again, some additional tools that we've embedded that are key terms in relation to financial literacy. I'll just go over some briefly in terms of an asset. This is something that has value, and you can have assets gain and lose value. You also have liquidity, so that's how easily you can turn an asset into cash. And you also have capital. So this is the money that you use from your income that you can use it to grow a business or invest as well as to save. There are some additional terms here as well in relation to dividends and investing terms as you start that journey. So, this is the payment that you receive as a shareholder for any profits from a company. So, this is sometimes in cash or in shares if you reinvest through something called a DRIP. So, that's a dividend reinvestment process. And then there's also premium. So this is the amount that is in relation to insurance policies to keep it active. And also, um, you would have a deductible amount that you may be paying as a portion of the premium or apart from it. But these are the out of pocket expenses before your insurance can start to cover these costs. So we're embedding terms, and we'll also share some more within our financial literacy portfolio, but we do have quite a bit to cover, so we want to move into some budgeting types. And so, as you're creating this budget, this is again our first step. There's some different ways that you can budget. One of my favorite is the zero-based budgeting. This is ensuring that every single dollar of your income is allocated, and at the end of your calculation, it would equal to zero. So you would know how much you pay for rent, how much you're assigning to groceries. And a budget doesn't mean that this is the exact amount. You can give yourself a buffer if you would like, but sometimes you can create just specific set amounts, but those typically would be for our fixed expenses. And if you need to make any life changes, you can adjust to those as well. The second we would have gone over, which is the 50-30-20 rule of budgeting, allocating to your needs, wants, and your savings. And you also have envelope system. Now, depending on security, safety, this is a 50-50 split in terms of our recommendations, but we've included it because some persons want to have physical cash, and so this is where you set aside cash in envelopes and you budget specifically for that. Now, with the cost of things, you might have thicker envelopes if you do it that way. But I would recommend this method more so for discretionary spending. So if you wanted to eat out, you know that this is your cash allotment for eating out. You can also do this in a more digital way via our workbook that we'll be providing you so that you don't have to actually use the digital cash, but you have to adhere to it. All right, and then you have the pay yourself first method. I'd like to say pay your future self method because this is ensuring that you see your income as a payment to your future self. And then after that, you would assign the rest to your expenses, but setting up the process so that you're saving for yourself first helps to ensure that you are creating a positive relationship with the money and that you're ensuring it's working for you. So with this, it's about automatically saving at the start of the month rather than the end so that you avoid the temptation to spend those funds elsewhere. It's also making sure that you are as proactive as possible. So we give some examples for this. using a budget of $3,000 based on a monthly paycheck and showing how you can save 20% of the income. Again, my disclaimer is that you might not be in the situation where you can afford to save 20% because you have to cover your main bills, your main needs, but even saving 10%, 5% of that income can lead to creating that positive reinforcement that you need overall. We also have incremental budgeting. So this method is slightly adjusted for each new period. So you decide what this looks like. And so one of our examples is focusing on a company. So think of it as you're the owner of your own life company and you have a marketing budget. But this year, you would have only allocated 100,000. Now with inflation, with maybe a additional travel, or maybe you want to hire some additional persons, you're going to increase that budget over time, or maybe shift your allocation. And so with that shift, you're going to assign a percentage. So in this case, it's 5% to account for the inflation and any new initiatives that you want to do. So then here it's outlining that instead of having the same budget over the course of time, you're increasing it by 105. Now, the way to think about this is we don't want to stay stagnant in life. So where you are, if you're 20 years old, is going to be different from where you are when you're 40. And that means that your expenses will also shift, but also your expectations out of life. So you will want a home, maybe even before that, of course. But you're going to say, in order to do that, I'm going to have to increase my income, and naturally you will have more expenses with a home. You have to take care of the lawn, you have to get lighting and pay technicians like plumbers, electricians, all of that. And so you want to also increase your income over the time and then have it align with your future budget. One of the things that we also recommend is having persons write down, like, I want to earn X amount. So I want to earn maybe $5,000 per month. And what steps am I going to take? Am I going to further my education? Am I going to continue seeking additional employment opportunities? And not just as a second job, but has a primary job that is going to pay me at that level. So we want to also see opportunities because that is also going to lead us to financial freedom. Again, just noting that you can place any comments, questions in the chat. We've also created some additional worksheets and examples for you when you're reviewing so that you can practice and see how this looks in terms of budget allocation and having a revised budget. We also go through some deep diving into the 50-30-20 rule, especially as a lot of financial institutions are reviewing your expenditures, what your obligations are. And so we wanted to make sure that we give you those tools as well and how to master this. And also deciding what are your needs. So these relate to housing, utilities, health, insurance, groceries. And then we have wants, dining out, shopping, traveling, any hobbies that you have. These are things that you can live without. And disclaimer, it will take some sacrifice in this area in deciding needs and wants, but sometimes it might feel like a need. And then the savings is related to investing, emergency, retirement. And if you want to have a college fund for yourself or for children, grandchildren. These are the future things that we have to think about. I'm seeing a question in the chat. Yes, you will receive a copy of the recording. We will be sharing that with you as well. So no worries there. So you will have the recording and the presentation too. And of course, we welcome everyone to join into the community because if you have questions while you're going through it, you can ask us as well. So it's a lot of information to digest. We know that for sure, but we want to make sure that you have all the tools that you need. So the highlight is that you're going to find a lot of financial rules and everyone has their own opinion on what you should do, but you really have to look at your own circumstances. So I really wanted to highlight that with this rule because rules sound nice, but they're not our reality. And you've heard me say, save even 5% because that 5% may be what you can do at this point. And you shouldn't feel ashamed. You shouldn't feel bad that you can't save more. That's where you are. And in order to get to the next stage, you have to start today. You have to start now with where you are and build those good systems. I'll pause here to give to see, where you've seen this because we have. So a lot of times, you see a lot of athletes or musicians. They end up becoming millionaires. They sign $1 million deals. And what's one of the things that we see happen in 20 or 30 years? Especially with celebrities. It's easier to kind of pick on them. I'm so sorry. But it's easier to see it happen to them because they have a lot of money. They come into a windfall. Another example would be lottery winners. What do we typically hear about those types of people when it comes to money? Okay, seeing some comments in the chat. Yes, they spend stupidly, they end up broke. So one of the main components is that people who have a lot of money don't necessarily manage their money well. And so it's about maintaining these fundamental principles even when you have a little. So you might be like, well, Brittany, you talking about $3,000 salary. I only make 1,500. I only make or I'm only able to save $500. That don't sound like a lot. There are people probably on this chat who can save $10,000 easily. It's not about that. It's about having these principles embedded because when you can work with a little or a lot, then you will be able to build that resilience. And yet, everybody wants to be at a point where you're comfortable in life, where you have that financial freedom, but it takes steps to get there. There are a lot of persons who make average salaries and they're able to achieve their goals. But it's going to take time. It may take some additional sacrifice, but you will get there if you stick to it. And equally, you have people who win $100 million on the lotto. And then they blow that money in cars and not thinking that the car is going to be an expense. You can't drive the car anywhere. You have people who buy homes and they don't begin to maintain the homes. So they lose it, they gamble, they think, oh, if I made 100 million, I can make 500. And then they give the money right back into the lotto process. So it's really about establishing these principles and the mindset because once you have that, then you will be able to move forward successfully. All right. So again, we tap into those benefits and I want to move into emotions. So we'll talk about some of the emotional pitfalls and how this is related to our money. So for you, what are your emotional triggers when it comes to money? What is your current relationship with money? How do you see saving and investing? And who do you take your money lessons from? Who have you used in the past? Okay, we're hearing that our emotions have been unhealthy, it could be better. Do you feel stressed when you don't have enough money to cover your bills? Do you get angry? Do you get sad? Do you become depressed? Or when you have a lot of money, when you get your paycheck, do you start spending? Everything is affordable now. You can go out to eat. You're paying for your friends. You're booking a flight. Okay, I'm seeing yes, inconsistent. It's a yo-yo, right? So sometimes when we have our money, we feel that joy, we're excited, we might be spending more. Okay, sometimes. Okay. And so we have to know what our triggers are. We have to know how it's connected to our money. So we have some emotional biases. I'm going to turn over to my team member to just go through this with you all, and we'll dive into it in more detail.
So hi again, guys. It's Doris, and today we're talking about emotional biases. So let's talk about the first one, fear of missing out, which is also known as FOMO. It's a powerful force that can influence our financial decision. Like we've all felt that urge to join in on what seems like a once in a lifetime opportunity. Because well, you only live once, right? I will share my recent YOLO moment. So the mega bounce, whole bouncy house they had. Like at the first time they advertised it, I was very much over the moon. I'm like, yay, I'm gonna be a little girl again, jumping around. But they end up pushing it back like try for 2 weeks. And at that point in time, I didn't bother want to go because I'm like, okay, like yeah, I'll stretch it out a little bit. But then on the last day, they had it for 3 days. So on the last day in October, they had it. I started talking to my friend, and then we end up speaking about let's go because we only live once, quote unquote, and it may be a once in a lifetime experience. So that I end up going to the bouncy house, had a time, but that was just my most recent experience of having a YOLO moment. However, my YOLO moments are usually for experiences and not much for materialistic things. However, it is crucial to recognize that some factors are beyond our control. So instead of us focusing on like outcomes, let's concentrate on refining our investments process. As I explained before, it's easy to get caught up in the excitement, like seeing everyone around you making money and having fun. But this anxiety can lead to hasty decisions, rushed purchases, like me, or unplanned activities, also like me, especially when the market is thriving. But remember, emotional bias can cloud your judgment. So, what can we do? We define a clear strategy. So calculate the real costs involved, not just the apparent ones. And importantly, prepare for different scenarios rather than trying to predict them. You should also reflect on past economic downturns to remind yourself of the importance of a well thought out plan. This approach will help you make more informed and less emotionally driven decisions. Is there anyone who had a moment where get a YOLO moment or fear of missing out, either a party or a fete or just a simple experience?
Yes, please feel free to comment in the chat. I would guess every carnival event.
Kind
Okay.
of bad, but okay.
All right. So yes, there is a common fear of missing out, and we want to be able to connect and reach out with people. But it's important to note that there is a future. You know, outside has not run away, leave us, as we like to say. So outside will be there. All right. Great work, Drasilia.
Okay, the next emotional bias is money illusion. So now let's focus on something many of us experience even without realizing it. Money illusion. This is our tendency to think in nominal terms rather than inflation adjusted terms. It's like looking at numbers through a rose colored glass. So, for example, imagine that you receive a 5% raise at your job. So you feel excited, because you're making more money now, salary increase, yeah, everything good. So you went from $3,000 to 3,150 per month. However, during that same year, prices of goods and services, which is also inflation, also increased by that same 5%. So that means the cost of groceries, transportation, and rent all went up by about the same amount as your raise. So in result, even though your paycheck is numerically higher, the purchasing power of your money hasn't actually improved. You can still buy the same amount of goods as before. So now if you believe that you are richer simply because of that your salary increase and don't actually realize that, some economic factor has increased or like inflation has raised the gain, then you're experiencing money illusion. So how do we deal with this? Always adjust for inflation to get a clear picture and don't just stop there. Compare your performance against relevant market indexes and inflation rates. This offers a more accurate measure of your success. Also think about purchasing power. Are you truly increasing what you can buy with your returns, or you're just keeping pace with the rising costs? Remember, these adjustments help us see beyond the numbers, providing a reality check against emotional biases. Let's always aim to make informed, rational financial decisions. The last emotional bias is risk perception bias. It's a common pitfall where we judge risk based on personal feelings rather than hard data. So first remember, use numbers, not feelings, because it's easy to rely on gut instincts. But real risk is all about data, like numbers. Always compare actual risk measures like volatility, like change in economy, the economy, to get a clearer picture. Next, question your comfort. It's natural to feel secure with familiar investments, but it's important to ensure you're not overlooking potential risk. Those investments that seem completely safe might not be so. Lastly, diversify deliberately. Don't shy away from spreading your investments across different areas, even those that seem risky. So diversification. This is like key to managing risk effectively. So remember that diversify deliberately. And lastly, remember, relying on feelings can lead to costly mistakes. Let's focus on making informed decisions by analyzing the data and not just by what you feel. Thank you.
Wonderful. Thank you so much, Drasilia. So these are some of the emotional biases. And again, we'll expand on more. There's so many that impact us, but we do have the emotional management checklist that you can use. And we'll also be posting these in the community chat as well so that we can think about, okay, Christmas is coming up. How are we going to plan, gift giving? We don't want to take away from our customs and our culture, but you may want to decide, okay, this is the type of gift that I can give, and this is something that's within my budget and not going overboard. You're tracking your triggers and you're also looking at what is reasonable. You're not panicking, and making sure that you're not stressed out to the max. All right, so we're moving into systematic decision making. And so when we're earning, we're thinking about why should we learn about money and finance? Well, because you are going to be able to grow your finances with earning more. You have income, as we mentioned, gained from different methods, and we have people who've done side jobs, side hustles. There's nothing wrong with doing that, of course, once you're following the rules and regulations regarding it. But you're able to make something that is a passion or a hobby into something that earns income or something that may not even take a lot of your time, but would provide you a profit. So you're thinking about, what should I do? How should I budget? How should I make purchases? These are the tools that are going to help you with that decision making process. And so you're reducing your emotional influence. This takes thinking logically. It's directly tied into reliable documentation. Part of this is just writing it down. Now, did you know that when you write things down, it activates the logical side of your brain? Now, that's science, because it activates that logical thinking component. I'm not talking about typing on the computer, I'm talking about pen and paper, writing it down. And that's why we have the budget workbook, and it's printable, and we'll also be able to adjust it based on feedback. But when you write it down, it connects to, wow, I'm spending $250 on chocolate every month. Like, yes, this is my guilty pleasure, but I need to cut back. Or this is how much I'm spending on eating out. Oh, I didn't even realize. A huge component of having the goal is writing it down. And this enables you to review how you are spending, tracking your income, and recognizing those patterns. We have to think about this pattern recognition component because it will tell you exactly how you're spending month over month. All right, so these again are some of the key principles to good investing, good saving, good budgeting, and making sure that you're learning on your previous history and gaining experience. So, Shemaya is going to lead us in the decision biases that we can experience when we're doing our budget, investing, and saving, or even borrowing a loan.
Good afternoon, everyone. This is Shamaya, and today we're going to go over decision bias. So we have a small intro here that says, if I watch the financial environment enough, I can avoid major losses and maintain all of my gains or savings. So the illusion of control is a common belief that by closely monitoring the financial environment, we can avoid losses and maintain gains. However, this mindset can lead us astray. There are three key points that we need to remember in order to avoid this. Number one is to acknowledge uncertainty. We recognize that some factors are simply beyond our control. Trying to manage every outcome can lead to stress and poor decision making. Number two, focus on process. Instead of trying to control outcomes, hone in on your investment process. This approach is more sustainable and less emotionally taxing. And three, prepare, don't predict. Develop plans for various scenarios rather than attempting to predict them. This helps in setting realistic boundaries and managing expectations. Remember, the key is to accept that uncertainty is part of investing. By focusing on your process and preparing for different outcomes, you'll be more resilient in the face of market fluctuations. So next, we're going to talk about the sunk cost fallacy. This bias leads us to continue investing in past decisions, even when evidence suggests that it's time to exit. It's like trying to dig yourself out of a financial hole because you've already invested so much effort. So I have a question to pose for everyone here tonight. And it's that if you paid for a non-refundable vacation, so if you already paid for accommodations, excursions, you've booked your plane ticket, everything, but the day before you had to travel, you got sick, would you still go just so you don't have to waste the money? Just a simple yes or no in the chat. Would you still go because you're like, I spent my hard-earned money on this vacation, I deserve to go, I deserve to get some rest? Or would you stay home because you're sick? Okay, I see a yes. Absolutely. And same. I would do the same too. But if you would do that, so if you would say yes to this, then that would mean you're participating in the sunk cost fallacy. So the key here is to start with a fresh analysis. You assess the pros and cons as if you're looking at the situation for the first time. This helps to focus on future prospects rather than past losses. So for the vacation, if you're deciding to go, you would weigh the pros and the cons if you should go, if you shouldn't. And setting exit rules is crucial. Decide on these criteria ahead of time and stick to them, regardless of any emotional attachment to past investments. This approach helps you to make clear, rational decisions. Remember, it's about focusing forward and not being trapped by past mistakes. So let's keep this in mind as we move forward. Next is status quo bias. This bias reflects our natural tendency to maintain our current financial situations to avoid the discomfort of change. It's that familiar feeling of sticking with what's known because shifting gears feels too risky. And I know I can feel uncomfortable with change sometimes. So I have another question to pose to some of you. How many of you have kept a subscription or bank account simply because it was easier than switching, even though you could maybe get a better deal elsewhere? Maybe you can raise your hand, put a yes in the chat. Like if you're a client at a particular bank, but you know the customer service is not great. Every time you go to the bank, you have to wait there all day. But the cost or time or effort it would take to switch to another bank is just too much work. So you stay at that bank and you're like, okay, I'll deal with it because I don't want to have to go and submit all these documents to open another bank account, wait for my card, that kind of thing. Yes, yes. Okay. Not too many options, that is a good point. So to counter this, it's crucial to regularly schedule self-evaluations. Picture these as checkpoints where you challenge whether your comfort with current positions really holds up under scrutiny. Ask yourself, is my comfort justified by solid analysis, or is it merely something that I'm staying with because I need to? You can consider implementing small incremental changes to your goals. Testing these adjustments can help to overcome the norm of the status quo. Remember, the aim is to gradually ease into improvements without feeling overwhelmed by any drastic changes. By doing this, you challenge a comfort zone and ensure that your financial decisions are aligned with your evolving objectives. Next is time inconsistency, sorry. This bias reflects our natural tendency to maintain our current financial situations to avoid, hold on. I think I'm in the same slide as before. Yes, I was in the same slide. Okay. So let's explore the concept of time inconsistency, which is another challenge in decision making. We often make long term plans with the best intentions, but find ourselves swayed by short term temptations. This inconsistency can derail our financial goals. To counteract this, we can consider setting up automatic investment plans. These plans remove the need for the in movement decisions, helping us to stick to our strategies. Another effective technique is to create commitment devices. So you write down your specific time bound investment commitments. This simple act can activate the logical side of your brain, which keeps you focused on your financial goals. And lastly, visualize your future self. Imagine how today's decisions will impact tomorrow's reality. This mental exercise links your future aspirations to your present actions. And remember, the key is to align your present choices with your long term vision.
Thank you so much, Shemaya. Very good. So we have these biases that impact how we react financially. And it's not solely emotional or on decision making. And we do have these checklists related to it, but it's also in maintaining our financial goals. And so we have these additional sections for you to review on your own time to discuss how you can maintain your financial goals, being able to access discipline and figuring out where you're getting peer pressure from, hearing any external noise, and how you can also ensure that you're not drifting from your strategy. And so we'll continue to explore these concepts in our financial literacy group and in future sessions, but we wanted to give them to you to access, to take time to digest them as well, and come back with any questions. One that I really like is the halo effect. We see things are going really well, and we assume that they're always going to go well, but we have to prepare for the unexpected and do our research individually. So these are some tools that are going to help you with your saving journey, your budget journey, as well as your investing journey. And we've created these checklists to help you so that you can monitor, hey, I'm trying to attain this dream that I have, and I want to make this idea a reality, but I need to focus on and I need some help, with myself and thinking about it so that I can understand if I'm making the right decision and going off of these principles. Now, cognitive awareness is being aware of the circumstances around you, and sometimes our brain skips a couple of steps. This is a survival mechanism for us. And this cognitive component, we want you to read through it when you get the presentation, and we'll come back into it because there's a lot to dive into here. And some of the decisions that we've made are because we have these biases and we're taking these shortcuts. And so there's some critical moments, and one of them is in hindsight. So I like this example just really quickly, because have you ever hurt yourself? Like, let's say you stub your toe, and then you hear someone say, careful, or oh no, you didn't see that. Has that ever happened to you? You stub your toe, or you run into something. Well, I've run into a glass door before, but that's beyond the point. But have you ever experienced that? Everyone saying, "Oh, careful! You shouldn't have done that." Yes. Okay. Exactly. If they could have seen that you were gonna stub your toe, they should have stopped you, right? But because they don't know, we can't predict the future. In hindsight, we say, "Oh yeah, that's be careful." But in reality, we have to decide that we're not going to know everything that's going to happen. And so with the hindsight, we think the event is going to occur because we have said so. And we're accurately predicting it because we said careful or, oh, you shouldn't have invested there. Well, there's some things that we can look at because of the fundamentals. But there are some things, especially with investing, that we didn't know that the stock price is going to plummet today. We didn't know that people were going to take out their money. And so we were still in the game. So we have to think about these biases as well because we use them in everyday life. And as you read and you go through the examples, you'll see, well, wait, I know about that before. Survivorship is very similar as well. So just to give you a brief introduction of it, let's say someone says, you want to, um, okay, we have someone who's interested in home ownership, or maybe you want to get a loan for a car. So we tend to think that everyone who has a home has had the home successfully because of the type of job that they have, or maybe they had the right family that they're born into, or they had an inheritance and they got it. So we have a tendency of looking at the successful people. And we want to hear only from successful people. But that's survivorship bias because we need to also listen to the stories of failure as well. What didn't work? What did they do that went wrong? Because that's also going to inform our decisions so that we can avoid those pitfalls. We have to think about what led to that failure. Equally important, we have to remember that the environment, the circumstances may not be similar. So we're listening and we're also making sure that we're not blindly applying it across the board. So we go through these different fallacies as well, and we be able to pick up on them. I want you to see it in yourself. And so this is again why we're focusing on building the community and having the journey together because you would be able to understand if this is a bias that you have and if you're considering all of the different factors. And that's why we've put in that checklist there. So we have our next interactive session, which is the game of life. So, are you in financial jeopardy? And this is just going to go into some activities related to oh, related to the financial terms that we would have gone over, but also giving you the opportunity to think about new terms. So I am going to open up so that it can be led by our interns, and then also open up the mic so that you can also speak and share with us as well. Okay, so everyone is able to unmute themselves. So we're just going to ask that you raise your hand. And so this is played like regular Jeopardy! So you will be able to pick on an option. On the left, it is 100 points, 200 points, 300, 400, 500. And then you'd be able to go from there. Okay, we're just going to have our teams, but it's okay. All right.
Okay. Who wants to go first?
And don't worry, we'll call on you and ask you. So, Dorcelia, feel free to just go down the list and ask persons what they'd like to choose.
Okay, Tanya, you can go ahead.
I'll do budgeting for 300, please.
Budgeting for 300. Okay, if you earn 2,000 EC monthly and spend 1,800 EC, what is your surplus?
What's 200? 200. What is 200?
Very nice. I like that. What is 200? We have to play just as the game. Very nice. Awesome. Casey, it's
Okay,
some
TC.
points.
Hi, good night. Can I have budgeting for 500?
Okay, budgeting for 500. This budgeting method involves dividing money into categories labeled needs, wants, and savings.
What is envelope method? Hello?
What is the 50, 30, 20 rule?
Okay.
Good try. Good try.
Okay, Tika, you're next.
And feel free if you want to help your fellow participants out, feel free to put in the chat as well.
Budgeting for 100.
Okay, this plan helps you track your income and expenses so you can manage your money wisely.
Writing it down.
It's a plan to give the first topic of this workshop that we had.
I don't remember the name. Can I get help?
Anyone wants to help Tisha out? Yes, Alicia?
Hello?
Hi.
Yes, sorry. I raised my hand to get insurance for 300, but I'll try. This plan helps you track your income and expenses so you can manage your money wisely. It helps to track your income and expenses. The only thing on my mind is a budget. Hello?
Yes. Yes, what is a budget? Correct.
Okay, thank you.
And you chose insurance 500, you said, or 100?
300.
300.
A premium.
Correct? What is a premium?
Okay, thank you.
TC, you can go.
Can I have loans for 400?
Loans for 400. This type of loan does not require collateral, meaning the lender relies only on your credit worthiness and promise to repay.
A non-secure loan. Okay, unsecure, yeah. Unsecure. Non-secure, yeah.
Yes, yes. Tanya, you next.
Hi, can we do personal finance for 200, please?
Okay. A score that shows how reliable you are when it comes to paying back debt.
What is a credit score?
Correct? What is a credit score? Who is next? Anyone else want to volunteer to go? Natisha, you can go ahead.
Okay, I'll try insurance for 100.
This protects you financially if something unexpected happens, like an accident.
Life insurance or a type of insurance like life or health.
Medical.
Basically, was insurance or life insurance. Correct. TC, you can go ahead.
Can we have loans for 200?
The original amount borrowed before interest is added.
The principal?
Correct? What is the principal? Taryn, you can go.
Can I have loans for 500?
A loan where the interest rate can change over time.
Taryn, you muted?
Um, I don't remember this one.
Anyone wants to help Taryn out?
Yes, can we have a lifeline?
Variable rate loan.
Correct. What is a variable rate loan? Okay, who's that? Taryn, not sure your hand is still up. Like you want to go again?
Sure, let me go again.
Okay.
Personal 400.
Money kept aside for unexpected expenses is called this.
Emergency fund.
Correct. What is emergency fund? Okay, who's next? Yes, TC, you can go.
Interest rates for 100.
The cost of borrowing money expressed as a percentage.
Interest rate.
Correct? What is the interest rate?
Go ahead, Felicia.
I'm sorry. I didn't hear the ending. Could you repeat?
For that one, it was an interest rate.
Oh, okay. Insurance for 400.
Still pay the amount you must pay out of pocket before insurance kicks in.
Is it deductible?
Correct? What is the deductible? TC, you can go.
Interest rates for 300.
I give you a calculation. If you borrow $100 at 10% simple interest for 2 years, how much interest do you owe?
$240.
No. What
People.
is $20?
Yeah.
Wait, so the interest rate is 10% per year?
Yes, simple interest.
Per year.
For
Okay.
2 years.
Yes, so it's calculated at $10 a year. So we just made it a simple example. So
Mm-hmm.
it's not
So we
over the course of a month. So you wouldn't
mm-hmm.
multiply by 12. It's just by
Yeah,
the
yeah.
year. Mhm.
Okay, no problem.
Yes, Taryn, you go.
Sorry, budgeting 200.
Budgeting 200. This term describes checking your spending against your budget to make adjustments.
Um, 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 Checking your spending against your budget. Mm. Lifeline, please.
Anyone else turn out?
Yes, I'm throwing
You're
out.
checking you're checking your spending against your budget to make adjustments. So what are you doing?
Is it
Budgeting.
still budgeting?
Pardon?
Is it still budgeting?
I guess you're tracking the budget, first thing. Okay, Tanya, you can go.
Greetings. I'll do budgeting for 200, please.
Expenses that stay the same each month, like rent, are called this.
Fixed expenses.
Correct. What are fixed expenses? Tanya, your hand is up again? Oh, okay. Okay, Tanya, you can go. Got some more to do.
Okay, I'll do insurance for 200.
Insurance that helps pay for medical expenses.
What is health insurance?
Correct. What is health insurance? Yes, there's K. You can go.
Uh, hello. Personal finance for 300.
This document shows your income and expenses over a period of time.
Uh, what is profit and loss statement? Oh, the bank
What is the
statement.
bank statement? Yes.
Okay.
So profit and loss is not incorrect, but in a business situation, that's correct.
Okay, 8 more to go. Who will be your last lucky 8? Yes, there's K.
Mm, can I get personal finance for 400?
This term represents the increase in the value of an asset over time, often used when talking about stocks, property, or other investments.
What are capital gains?
What
Appreciation.
is
Okay.
appreciation?
Okay.
Guess time.
Interest rate for 200.
Interest calculated only on the principal.
Only on the principal. This is a
Mm,
fixed.
Simple interest.
Correct. Yes. What is simple interest? See, you can go.
Loans for 500? Is that it? Sorry, loans for 300?
This type of loan usually has higher interest rates and is based on your paycheck.
Um, what is a secure loan?
What is payday loan? Yes.
Okay.
That's okay. It's good for trying. We have 5 more minutes. It's Natisha, sorry.
Uh, Insurance for 500. I'm gonna need a lifeline though.
Insurance that replaces part of your income if you cannot work due to illness or injury.
Uh, some like disability. Um,
Correct. What is disability insurance? Yes, Tanya, you can go.
I'll do loans for 100.
Money borrowed that must be paid back with interest.
What is a loan?
Correct. What is a loan? Yes, TC, you can go.
Sorry, personal finance for 500.
This term describes the difference between assets and liabilities.
Capital?
Correct. What is equity or net worth? Okay, and last two. Who are your last two? Yes, Tanya.
I'll do interest rates for 400, please.
This type of interest rate can change over time depending on the market.
What is variable interest rate?
Correct. What is variable, adjustable, or floating interest rates? And the last but not least, who is taking interest rates for 500?
Pauline.
Yes, TC. Pauline? Okay.
Yeah. So yes.
The type of interest rate that has been adjusted to remove the effects of inflation.
Is it what's the real interest rate?
Correct. What is the real interest rate?
Wonderful. We have cleared the board. This is amazing. So we hope that this has helped you to think about some of the financial terms that we would have covered thus far, and also learning some new ones, some things that you may not have known before. And this is what we'll continue to do. Um, yes, I see a comment here that there were some internet issues. Yes, so we definitely will be able to share the presentation. We're also going to share the recording where we are thus far, and we'll be having some follow-up sessions because this has been such an interactive session that we have so much more to go over with you. But we won't be able to get it all done in this session. That's okay. We're saving something for later. That's good. We will have a breakout room session with our last few minutes of the presentation where we're going to create some smart goals. But I just want to go into investing and highlighting that component. That way, we at least complete a full session, and any questions too that you may have. We'll also want to leave some room for that as well at the end. So I wanted to go into the investing component and just going over some frequently asked questions related to that, but making sure that we cover this aspect to get your mind going and to think about other questions that you may have for upcoming sessions. So we really appreciate the engagement that we've had and interaction. So, one of the questions that we got in relation to investing is how can I get a loan without the money to invest? And so, um, most banks in Antigua and Barbuda, they're going to require some level of commitment from you. So we hear the word collateral, and what does it really mean? It means that you are committed, that you already have something of value that you are willing to trade if you do not complete the loan process, and or it's a guarantor, but whoever is the guarantor is saying yes, I will pay back. They're co-signing on the loan. And so with this, you need to be able to have some, as they say, skin in the game. And even in conversations that we would have had in other more industry workshops with like ECCB, this is what all of their products still have. You have to have some level of savings that you can then assign as a down payment, as a deposit to these loans, unless it's an unsecured loan and they have limits to how much you can get. So that would typically have a threshold, maybe a 5,000, 10,000, 15,000 EC dollars, but you wouldn't be able to get a $50,000 unsecured loan because that is too much of a risk for the financial institution. So, in that regard, you do need to build a firm savings allocation, a firm savings track record. And one of the things that is going to be rolled out more, it already exists, but it's a credit score for individuals and making sure that the financial institutions are able to track our um, savings and it, not savings, sorry, track our payments to their loan products across various institutions. So instead of just writing letters like they do now to all of the financial institutions, they would be able to use this score that's assigned to you. So, how can I use one small slice of the pie and multiply it? How can I gain financial freedom? So, as we mentioned, we have to start small. We have to assign, even if it's $50 weekly, we know that a financial institution in Antigua, St. John's Cooperative Credit Union, has a program like this where you can have a savings account starting at even the $50 weekly, and you also have to choose low risk options when you are investing. Now, some of these are not as rewarding as they were 10, 15, 20 years ago, but being able to upskill yourself and building your educational knowledge is a multiplier in order to earn income, and also diversifying into creative industries as well, where there's other payment schemes such as royalty, and also licensing. If you are also investing and gaining financial freedom, you want to stay away from the get rich quick schemes. You want to build the wealth steady and slowly. So we have some commonly asked questions, frequently asked questions that we have provided here and some that we have expanded on throughout the presentation. And we want you to take time to review those answers as well. And we have a consolidated question and answer sheet that we'll also share with you based on our answers, because I know this is digesting, we're processing the information, and so it's good for you to review. So if you have a question, you can always submit it to us in the group, and we would add it to that question and answer list. So we have some e-brokerage tools that are available. One that we have reviewed would be the Sagicor e-brokerage tool. How many people are aware of that product right now? And we're not sponsored by Sagicor in this, so we're just sharing that this is a tool that is available. Okay, so just in terms of what this e-brokerage service provides. So there are self-trading services as well as advisory services. And yes, it is in review depending on your exposure to investment. This can seem costly, this can be expensive, but there's also a reward as well in terms of being able to have those capital gains. I heard that word used. And so, initially, if you are new to your financial planning journey, again, this is going to be building the healthy steps first and then entering into this phase. Now, this particular service has a minimum of $1,000 US. So that's around the equivalent, I would just say, has a buffer of 3,000 EC to be able to enter into the self trade and enter into it regardless. And so I'm seeing that this is something that's new and you're not sure how to get involved. We will share the links with you with this particular service, and also noting that it's important to understand entirely um, how the stock market works, what are some of the trading opportunities, and how you would decide which stocks you should purchase, and also any mutual funds or ETFs or any bonds that are accessible as well. So one of the main things, so let's say you do qualify and you have that $3,000 investment. This is again going to be 3,000 EC that you can tolerate a fluctuation in loss and gain on loss and profit, because the market moves based on other shareholders, other investors coming into the market, right? And so this is a good example. So you're seeing the money moving. It's moving from left to right, different currencies. And this is a great analogy of the ups and downs that take place. Now, risk is not without reward, but there's also loss. And people don't tend to focus on the loss component. And so I want to again implore you on that to review and research everything that you are doing in this regard before entering in. And so some of what I'll go into next will give some guidance to that. But there recently was, in terms of cryptocurrency, a huge plummet in the market. And because of the emotional triggers that persons had, they weren't able to handle that level of loss. So some persons lost, there was one individual in particular that lost $65 million. And some of it wasn't theirs. They were investing on behalf of other people. And they unfortunately are no longer alive today because they could not handle that threshold of loss. Now you might be thinking, well, Brittany, 65 million, I don't have that. I wouldn't do that. But you would be surprised that there are people who have lost less, even $1,000 can feel like having a whole panic attack. So again, this is why I premise with, if you're entering into investing, you want to be able to only invest funds that you can afford to lose and have fluctuation on. That you don't need to pay your bills, that you don't need to pay any immediate expenses, or to offset any costs that you may incur. So, with investing, there are various ways to do it outside of the stock market. So, just as a reminder, there's savings and cash deposits, CDs. There's real estate, which is in relation to land, and also starting a business, all of which still have their own level of risk and reward. So, we have embedded in the links in the presentation some links for a case review that you can look at, but just wanting to share some of the level of risk in relation to investing. So you have conservative action. So this focuses on lower risk investments, and it gives you the percentages at which you would divide that $3,000 across your portfolio. So this means that everything within the market has its own level of risk. Technically, stocks are still seen as riskier than bonds and other fixed income strategies. And so each area, you have income and growth, you have moderate growth, and aggressive. So aggressive would be the next extreme from conservative, where you'd be investing 80% in equities. And equities is just another term for stocks, because stocks come from shares in actual companies. So you could be a shareholder in um, Microsoft and Apple, or you could be a shareholder in Home Depot, or you can be a shareholder in Sagicor even has shares. You can be a shareholder in West Indies Oil Company. So these are different shares equities that you can be a part of. And then you also have fixed income, which would more so be your bonds. And also you have cash. And so cash is always going to be what's left in your cash savings. And depending on the brokerage firm, they may give you a percentage on the cash as well. Now, if you have more than a thousand US or 3,000 EC to invest, then the next tier under Sagicor is the $5,000 tier, and that's 5,000 US. And then you would go into getting advisory services for that amount. There are fees associated with getting wealth management services. And if you have more than $250,000 US to invest, then you would be speaking with a designated representative wealth management specialist. And again, we'll share this information with you. Trading itself does have expenses per share and also minimum trades. And we will dive into this in future sessions, as I mentioned. But there's also different strategies in relation to investing. Again, we want to make sure you have the principles first and down pat, but we will share this information with you so that you can review. There's also buying the dip, dollar cost averaging. So there's various strategies that can be employed, but you do have to review what works best for you and your budget. So if you know that you don't have an additional $3,000 again that you can lose, let's go based on what's in your bank account right now. What's in your savings account? Do you already have $3,000 set aside? Some other rules that we use are, can you buy something twice if you wanted to? Then that would be how you would review, am I ready to invest? And you can also ask, and we would be able to provide that support to you as well to see where your thresholds are. So in future sessions, we will go over the remaining sessions of the presentation, going into borrowing and various borrowing methods. And we'll also discuss repayment, looking at the 5 C's of credit, and also the interest. So that's more of the math side of finances, and we want to be able to review that as well. But I think most important right now is us setting goals and using the rest of our time to do that while we're in our breakout rooms. So we're going to just segment everyone so that we'll have some discussion, and feel free to stay on even past the time if you're able to. But we want to express thank you for being a part of the EcoShore Sustainable Futures Network. Build Your Future and Financial Literacy Workshop. We will be having again another session to go over the learning about loans, as well as the investing, insurance, and risk management side of things. And so we will share those dates with you. But we know that our next in-person event and activity will be relating to our vision for 2026 and working on these goals and creating concrete plans. So, are there any questions that you have before we go out into our breakout rooms? They'll be pre assigned, so you'll just be able to go into them. Yes, TC?
Back to the interest stuff, with the calculation that I did. Is this like how it is calculated when you go for a loan? Or
So
that was just
each
an example that you guys
so
use?
so that's an example that we used. It typically would not only be $20 that they would want as an investment of of that amount, and you wouldn't receive like $100. But it depends on your loan agreement, and so this is why it's important to ask. And depending on the type of item that you are getting a loan for or the type of financial institution, they will have it specified within the loan agreement. So, this is why it's important to advocate for yourself and ask questions before you sign on the dotted line. So, simple interest may be more so for appliances, smaller items, things under $1,000, but you would
Okay.
typically go into compound interest when experiencing loans for loans for
Vehicles, etc.
vehicles, loans
Mhm.
for student
Land. Yeah.
loans. They compound based on the balance. So the interest is not
Okay.
added to based on the principal, it's added based on the balance of the loan. And we'll be able to go over through that in terms of examples, but we wanted to make sure that everyone understood the terms first so that you and see where everyone is because we want the community to move forward together.
Okay, no problem. Thank you.
You're welcome, most welcome. Nicole, thank you so much. No question. All right. And again, you may think of something between now, tomorrow, next week. You can feel free to share with us at any point in any of the forums that you feel most comfortable, whether it's one on one in the community group, because it may help someone else, or you can reserve it for one of our future sessions. Okay, so our expeditioners and team members will also be in the various groups to lead. So in room one, we have Torcilia. In room two, we have Shamaya and myself. And in room three, we have Odisha. What I will do is I will also place in our group the SMART goals. And have that also on the screen so that you'll be able to see it from that point as well. But ladies, you also have access to that uh, component so you can share within the group. All right, last call for any questions, any comments that you would like to make are open as well. We have the evaluation form that Odisha has placed into the chat. So feel free to share with us any feedback on the sessions and what you would like to see for the future, because that's why we would have created the budgeting workbook and ensured that the presentation is as thorough as possible. So there are quite a number of slides. I think we have maybe about 200 slides that go over examples and we'll break them up for you. But we have a lot of information in relation to this area. And we look forward to connecting with you. All right, so breakout rooms. Here we go. Okay, so you would see a notification related to the breakout room, so feel free to join. And if you have any questions, if you're having any trouble entering the breakout room, do let me know.